CAMELS is a supervisory framework to standardize how financial institutions like banks and credit unions are assessed by regulators for their safety, soundness, and overall health. However, bank examiners placed kind of a disproportionate weight on the quote-unquote management component when determining a bank's CAMELS rating, even though the rating often reflects subjective impressions rather than a concrete financial indicator. Ms. Flowers, how does this over-reliance on a subjective assessment of management lead to misaligned supervisory actions?
Thank you for that question. I think it's really important. If you're overly focusing your exam framework on the minutia of governance and management issues, which can really run the gamut from IT, vendor management, and a lot of sort of immaterial risks that are very unlikely to impact the safety and soundness of a financial institution, then you're focusing supervisory attention away from the true risks that they should be focused on, like credit risk, liquidity risk, interest rate risk, those types of things. So by focusing a lot of attention on the most subjective and uniquely subjective aspect and component of the management of the CAMELS framework, you redirect supervisory attention away from material financial risk.
So if you would shift towards a more objective, kind of transparent criteria, could that improve both the accuracy of the ratings and I guess the overall safety of the banking system?
It would certainly improve the accuracy of the ratings. The CAMELS framework should be a framework that assesses the financial condition and integrity of an institution, focusing it away on subjective measures of risk, including the minutia that allow examiners to engage at best in sort of a management consulting practice and at worst in politicizing risks, takes away from their focus on core issues of safety and soundness.
So in your testimony, you described how the management component has been used in practice to kind of measure the level of reputational risk in a bank's lines of businesses. So can you describe how this reputational risk has been used by federal regulators to debank entire industries, really, sectors, industries, and how could the current CAMELS framework and the management component could be changed, or how could it be changed to address this?
So reputational risk is sort of a derivative or ancillary to other risks that supervisors are better equipped and have tools to address. Reputational risk is very hard to anticipate, it's very hard to address, and as you said, it can be used inappropriately in political ways because it's unmoored from any kind of standard in legality. It can be used to go to ding a bank for practices that are in fact legal. We've seen this, as folks have been discussing today, targeting certain industries depending on the political milieu. If we take away the ability to focus on risks that are not tied to the financial safety and soundness and refocus our supervisors on material financial risk, then inevitably we move away from an amorphous concept that is really just derivative of the risks that are truly important.
Thank you. Over the past decade, we've seen a steady decline in the number of small banks operating in the United States. We've talked about this on the committee many times. A lot of it is the complex and burdensome regulatory environment from Dodd-Frank to actions by Biden-era regulations. So, Mr. Radcliffe, can I just ask you really quickly, could you discuss the consequences that having fewer banks for communities across this country has had an impact and will have an impact, I think, on communities?
Certainly. In our state alone, we've dropped below 100 charters now for state banks. And we will end up with some communities that do not have a bank at all, which is going to limit consumer choice. I think we'll continue to see consolidation due to the regulatory burden and the barriers to entry.
And what we've seen is when there is a single financial institution in a community, oftentimes if that moves on, closes, it has a direct impact, obviously, on commerce and the way small businesses function and operate in that community. Is that right?
Yes, they have to go to other towns to get banking services. And you'll end up with a banking desert.
Very good. Thank you so much. I'll yield back.